significant occasion for Vivriti Capital and for me personally. I've been in Chennai now for 13 years. I moved here from Bombay when I joined IFMR Capital, which is currently called Northern Art Capital. Love the city and decided to start Vivriti here. Vivriti has been now a 6-year journey. We started in June 2017. We are a slightly unusual NBFC in the sense that we don't deal with the segments that you typically hear about, and which is why I spent some time on not just the numbers but the business model, so that everybody's clear about where we stand. But first, numbers. We are a 6-year-old company. We are audited by KPMG. We have a gross asset book of 5,850 crores or thereabouts, with a net worth of a little over 1,500 crores, gearing of 3 times, capital adequacy beyond 25%, a credit rating of A from 2 rating agencies, ICRA and CARE, and well capitalized as well as levered by a very large number of lenders as well as HNI investors. Today, Vivriti, in addition to the institutional lenders and investors that you see on the screen, we also have more than 1,700 HNIs who have subscribed to our bonds through the private placement route in the past. Pertinent to note, as many of you would know who track NBFCs, that RBI mandates a minimum capital adequacy of 15%, which can be done through a combination of equity and subordinated debt. Happy to let you know that we are well over 25%, which makes the company much safer, and that number is almost entirely tier 1 capital, which is pure equity. What does our group look like? The parent company is Vivriti Capital Limited, which is also the issue fund manager for alternate investment funds. And finally, we have an associate company called Credit Avenue Private Limited, also based out of Chennai, which is a digital marketplace for debt. Here is a sense of the milestones that we have covered since the day we started. We started, as I said, in June 2017. We got our NBFC license from RBI in January 2018 and shortly thereafter commenced business in lending. In January 2019, we raised our first round of equity. Our Series A round was one of the largest Series A rounds at the time, which was around 300 crores of equity. In the first round itself, from a US-based private equity fund called Creation Investments. Shortly thereafter, we got an A- rating from ICRA. In March 2020, just a few days before the country shut down for COVID, we got our second round of equity. Light Rock Investments put in 350 crores and Creation added 100 crores, making it a 450 crore round, Series B. This kept us very, very well capitalized during the period of COVID, which was a tough time for all of us. Our assets under management crossed 5,000 crores in March 22 itself, and subsequently in March and May 22, we raised more equity, which is when TBS Capital came in, and Mr. Gopal Srinivasan, whom all of you know very well, I'm sure, joined our board of directors as well. ICRA subsequently upgraded us to an A rating in June 2022, and we have continued to grow since then, build scale, build profitability, and finally in May 2023, we took a decision to convert to a public limited company for the purpose of the issuance that we will speak about shortly. Now coming to our business model. What's our model all about? This is where I'm going to spend a few minutes because all of you are familiar with Shriram, with Sundaram, with Chola, with Hinduja, right? Hinduja finances trucks, Chola finances trucks, Chola also has a home equity business, Sundaram finances trucks, has a machinery finance portfolio, right? And Shriram finances used trucks, whereas Shriram City Union Finance, erstwhile, which got merged, was a MSME lender. Now we are none of these. We finance corporates, right? We focus on corporates that are cutting across a wide array of businesses, ranging from shipping, mining, engineering, pharma, healthcare, trading, retail, apparel, processing, FMCG, financial services, infrastructure, road development, port development, civil works, electricals. These are the kind of companies that we lend to. These companies are typically companies with anywhere between 100 crores to nearly 3,000 crores of revenue, right? As you can see, a retail lender lends in lakhs. Our average ticket size is 3.5 crores. That itself should give you a sense of the segment that we are operating at. Now, when we lend to these companies, we typically lend to them using term loans, but we also provide to them a wider array of products, right? Because our customer is a complex animal. They want a lot more by way of services and products that can cater to their specific needs. And therefore, we must be flexible from a product perspective. So we have over time launched more and more products. We launched term loans, we launched working capital, we launched vendor finance, dealer finance, securitization, co-lending, NCDs, commercial paper, recently leasing, recently factoring. These are all products that we have launched over the last 5 years to continue to cater to a wide array of needs that our customers require, right? Our ticket size is an average of 3.5 crores. There is a wide range, and our tenure of lending typically is in the range of 2 years, does not go beyond 4 years, but we are here to be a term loan provider to the mid-corporate space. This is the nature of our business. Now, how have we done on metrics for the company? First and foremost, our lending rates are in the range of 14%. Our borrowing cost has consistently come down. Last year, however, given the way the repo rate went up by more than 200 basis points, but we went up only by 24 basis points from 10.29 to 10.53. And therefore, the spread between our lending rate and our borrowing rate has expanded every year in the last 3 years, right? Here is how our growth has panned out. Our growth has happened with a very clear focus on profitability. The book has grown from 1900 to 5800, which is roughly 3x. But the profitability in the same period went from 30 to 129, which is more than 4x. Which gives you a sense that our profits are now building rapidly as our business is scaling up. This also shows up in the return on asset, gone up from 2.3 to 3, and return on equity, which went up from 4.1 to 8.9 over the same period, right? Along this way, as I said, it has been my focus to maintain the company safe and ensure that we are well capitalized. So we have consistently raised equity, as I mentioned a short while ago. We currently stand at a little over 1,600 crores of net worth. This is as of June end, and our capital adequacy continues to be 26%, just a little above 26%, which is well above what the Reserve Bank of India requires of us. Headline financial metrics, many of these numbers we have covered in the previous slides, so I will not spend too much time. But one number which I think is extremely important, which all of us who look at financial services will know, which is the gross non-performing asset. If you can see FY21, FY22 and FY23, we are at 0.3, 0.3 and 0.3, right? So this has been a portfolio that has been maintained well over the last several years, and as a result, we have continued to, indicate quality to every investor who looks at us, and that should give a lot of comfort to your readers. From a plan perspective, while I will not be in a position to comment on where we expect to reach, etc., but
across all categories of investors. In fact, from the country's perspective, I think we have seen a lot of good NBFCs coming up from Chennai, and we hope that this will be an addition to that hallmark of names. Let me introduce the people on the dais. I have with me Mr. Vineet Kumar, the promoter and co-founder of Vivriti Capital, and Mr. Srini, who is the CFO of the company. Before we go on to the issue-based specifics, let me take some time to talk about the company. The company was started in 2017 by Mr. Vineet Kumar and Gaurav. Vineet Kumar holds a degree from IIT Kharagpur and an MBA from Bangalore. And in his previous role, he was director of Vivriti Asset Management Private Limited, and Chief Financial Officer of Northern Arc and Chief Executive Officer of Northern Arc Investment Managers Private Limited. Srini was from Deloitte, KPMG, and has been the guiding force in terms of taking the financials of the company going forward. Vivriti Capital is a systemically important non-deposit taking non-banking financial company. It's backed by marquee institutional investors who have been providing capital and guidance by way of becoming part of the board. The investors which have regularly infused capital in the company are Creation Investments, Lightrock, and in the latest round, TVS Capital. These marquee investors have provided capital of almost 1,300 crores up till now. And from a capital-based perspective, we are talking about a company which is only levered by 3x and with a AUM of almost close to 6,000 crores is very well capitalized. In terms of the products that they offer, their main products are through mid-corporates, including term loans, working capital, demand loans, securitization of receivables, supply chain financings. So they basically are into mid-corporate lending, and in that particular segment, they are a leader. The ticket size of these loans range from 10,000 to 80 crores. The one thing that really attracted us to the company was the granularity of the loan book. The average ticket size of the loan is just 3.5 crores, and the loan tenors range from 1 month to 48 months. In a very short tenor, they have been acknowledged by the market by way of a lot of awards like Financial Services Company of the Year at VC Circle Awards 2023, Top Alternative Lending Tech Startup by Traction, Company of the Year Financial Services at Dare to Dream Awards by G Business, and Best BFSI Branch 2023 by Economic Times. Now talking about the financials, this company had a track record of profitability from day one, and in the last 3 years we have a profitability of 30 crores, 67 crores and 129 crores respectively in FY21, 22 and 23. One of the most remarkable things is, along with profitability, the asset quality has been remarkably robust. The net NPA numbers stood at 0.08% and 0.07% for FY23 and FY22. The conservative risk practices that they have followed in the lending has translated into very good asset quality numbers and accordingly into the profitability. Now, when we talk about any NBFC, I think the most important part is the liability side. The company has been able to create a wonderful base of liability with 218 odd institutional lenders, and with across categories. Like if you talk about PSU banks, they have Bank of Baroda, Bank of India, Canara Bank, private sector banks like HDFC Bank, Axis, Kotak, and NBFC side like Birla Finance, Bajaj, Tata Capital Financial Services, Bramble Enterprise, SIDBI. And one of the most remarkable things is one of the rare A category NBFCs which has mutual fund lending as well. Axis, Kotak, and Nippon mutual funds have lended money to this NBFC as well. So from most of the sides, the NBFC is very well covered, very well capitalized. Now talking about the issue in specific, the issue is starting on 18th of August and will close on 31st of August. There is an early close option for the issue. The issue consists of 5 options: 18 months monthly and 18 months annual, 24 months monthly and 24 months annual. There is a option in the middle as well, 24 months with quarterly principal and interest, which is for investors who want to get a regular flow of money from principal perspective as well. The issue is open for all categories of investors, UIB, corporate, HNI and retail, with a ratio of 20%, 20% and 30%, 30% for the last 2 categories. The coupon ranges from 957 to 1050 across the 5 series. With that, I would invite Vineet to talk about the company in much more detail. I welcome you all, and as you have forwarded your support for all JM transactions, I hope you also extend support to this one. Vineet.